Deven Choksey also joins us now. Let's get in our first market voice as well. Needs no introduction. Deven, hi, good evening. Nikunj Dalmia from the ET Now studio. Your first reaction?
Yes, Nikunj, I think the net profits are very much in line with our expectations. We have been expecting somewhere around 3,885 crores of net profit, and the profits have come at 3,852 crores. The GRMs we have been expecting slightly on a higher side at around 6.25 to 6.5 dollar per barrel, and I think that the ARMs have come down a little lower to $6 per barrel. Of course, I think the important aspect is that I think even at this GRM, if you look at the volume, possibly I think the company has delivered the result as based on the expected lines. Given the kind of pressure on Singapore GRM, I think this is much better number that one can think about. At the same time, Reliance's existing refinery went in for 2 weeks of plant shutdown, and the RPL integration has taken place for the first time in this quarter. So from that perspective, I think the blended GRM of $6 per barrel is, I think, quite a welcome number, as I would call it.
The other income, if you do a year-on-year comparison, has gone up from 151 to 628.
Right.
And I don't think anybody was factoring that in. So you have a neat 400 crores, which you need to figure out from where it has come.
Oh, would be interesting, and we'll actually talk about that also. Yes. But Deven, a quick cursory word before I go to Vanna. This essentially, Reliance results coming in line with estimates doesn't do too much for the stock, does it? The bonus issue has failed to excite the stock. There are two overhanging events on Reliance Industries, and the results are bang in line with estimates. So, no positive triggers.
Well, you can say so, but I think, as I said, that the positive trigger would only come in form of the court case and judgment whenever it comes in the next month or in the early December. So from that perspective, I think, yes, you're right. I think there are no positive triggers. But one important aspect that one would like to call it is that I think the company has delivered on the expected lines against, I think, the pressure on the GRMs with most of the other refiners. You have got, I think, the higher GRMs. Despite of new refinery of RPL, and despite of, I think, higher absorption of cost of interest as well as on depreciation and the taxation side, I think that the performance is probably, I think, though it is in line with market expectation, I think it would definitely keep analysts happy and the market happy, I suppose.